Hello friends, welcome to my YouTube channel and thank you very much for going through my channel, watching my videos and giving your valuable comments. I request you to continue the same momentum so that I can get a positive feedback, a constructive feedback, and I can adjust the videos accordingly. My name is Ajaz Kazi and I welcome you once again in my YouTube channel with yet another topic. And the topic today is key financial risks in EPC projects. Most of the projects, at least I come from an MEP industry, are under financial strain. One is the profit and loss on the paper, that is also under a lot of strain. But even after that, getting the dues from the customers, from the end user is another challenge. So what are these key financial risks when you take care of EPC projects is what we are going to look at with some of the mitigation strategies. These are standard mitigation strategies which you can apply on your project, you can customize on your projects. So some of these risks, the risk impacts and the risk mitigation strategies are mentioned in this table. Let us go one by one. One is funding delays. The project which is getting funded by institutions, banks or the investors, the delay in releasing that fund is a major risk, and that can have an impact of project delays and increase cost due to interest on the borrowed funds and penalties. So this is one of the major impact, and I believe this is one of the key financial risk on the project. What could be the mitigation strategies? One is getting the right amount of funds, secure them early. So get the secure financing early is one of the important thing which we can do, or else you will have these speed breakers, like on the roads there will be delays in funding. And always establish a transparent terms with the lender so that there is no dispute between the lender and the borrower later. That can have again delays, right? Disputes. Maintaining a good relationship with the financial stakeholders, maybe a bank, maybe an investor, maybe an institute. You need to maintain a proper relationship, and that can also happen with good communication, right reporting. The right reporting also plays an important role, because if you report something wrong and if they find out later, there is a breach of trust, and that can also have funding delays. The second important risk is cost overruns, and that is another major thing I think we can see on many projects which can happen. The impact is increased project cost, obviously, because the cost increases and you reduce the profit margin. So how do you mitigate this? Implement strict cost control. Always have category wise, WBS wise cost reviews and then control. If you don't have the segregation on WBS, you will not be able to identify where is the exact issue, and you will go on searching. So if we have this in place, proper reviews in place, you will be able to address. First of all, you will be able to trigger and then address it later. Regular review, as I said, and always have contingency fund available. Don't work on the estimation neck to neck. Anything can happen on projects, right? Projects are full of challenges, and any challenge can come, any risk can come. For that, you need to be financially secure. You should have this contingency so that you can utilize that contingency as a mitigation strategy. The another important thing which we may be facing in India is currency fluctuation. Most of the international imports are done on the dollars, and if our rupee goes down, we have a problem. We must have estimated with X, Indian rupees versus dollar, and then the dollar becomes strong, you will have to import in dollar, and when you convert into current local currencies, you will have to pay higher charges. So again, there will be cost increase on the project. How do you mitigate? There is a hedging instrument which you can use. It comes at cost. But if you feel there's going to be volatility, it is better to, hedge the dollar rate of now for a certain period of time, right? Stable currency agreements also can be done. You can see that the agreement which is done between the international vendor or international institutes, you can have a long-term kind of agreements. Difficult, but we can try. And you'll have to manage the exchange rate. When you feel it's low, import them so you don't have to pay extra when the fluctuation goes on the higher side. The next is major. As I said, you can say on the paper that you got profit, but are you getting that cash flow, right? So if you don't have cash flow, delay in supplier payments, projects stoppage can happen, because if they don't get supplies, the project gets stopped. You actually run towards the potential bankruptcy. So that is the impact with that risk. How do we do this? Detailed cash flow planning. Every project has to have a cash flow statement, and for that you need to have a proper schedule. A schedule has to be close to correct, so that you can convert that schedule into cost and the cash which you need to pay to your vendors. If you don't have this, you'll have problems. You may have to get some short-term loans if required, or you should establish some emergency credit line so you don't default on payment. The next risk is contractual financial risk, and this are many clauses in the contractual with respect to commercial or financing which can be very, very harmful to you, right? You can lose a lot of money, and this is very important. Just to give an example, if we have a sole arbitrator as customer, and if there is a dispute, you're going to lose, because and after that, if you want to still contest, it is a long journey, right? So it is very important to review the terms, contractual terms. Don't only look at the specification and the cost, but take legal advice if required, and ensure clear and fair terms for both the sides. The terms which are little, difficult to read, you must go to lawyers, take a legal advice so that you are clear, and always try to be as transparent, as clear with respect to the contractual, clauses. Then inflation and price escalation. We have seen what happened after COVID. Prices went up for all the raw materials. People who established the contracts before COVID and they wanted to run the project after COVID, they had huge losses. So it's very important to monitor. It is important to have a proper review in place. As a mitigation strategy, always go for long-term fixed contracts. Difficult, but try, right? And always factor the inflation. You can get good trends from the financial people from your company that what could be the inflation, and you can build in your costing. Otherwise, inflation can cause you huge project cost overruns. The last is taxation and regulatory changes. There have been, and you can see every budget, you will have some impact of taxation or regulation which is coming in, which can impact. It can increase your project cost, and there could be delays because of this, right? When the GST came in, we faced little bit turbulence. Yes, there was a delay on the project because purchase orders were supposed to be, short close, new purchase order to be released, and that period was difficult because all the softwares were supposed to get, activated or revised or change accordingly. So this is another important factor. There has to be continuous monitoring of legal as well as tax changes, and you should be ready for this. So these are some of the financial risks which I thought are very, very important for all of us. All of us who are part of the industry, I believe it has given you a lot of insights. You can drill down a little more on this, but these are the key financial aspects or risks which I thought I should bring it to you. Thank you very much for watching this video. Please follow me on YouTube, Facebook, LinkedIn, and ajaz.com. Thank you very much.